obviously, they're where they want to be or better than they thought it would be in terms of the economy. We have 3.7% unemployment. The inflation rate is hovering a little bit above 2%, but that's acceptable. They undershot it for quite a while. If anything, the signs tell you that the pressure on the inflation front will be slightly higher, not a deflationary risk at this point. But I've said this a million times, this is not what they're up to right now. Having reached the dual mandate targets and surpassed them in the case of full employment and bringing people from out of the workforce, and the quits data shows 7 million jobs are being unfulfilled. Put yourself in their shoes, and that is to prepare for what should happen at some point, we don't know when, a downturn. You want to get enough rate increases in under your belt without disrupting the economy that you can then give back to mitigate a downturn. So I think the path is fairly predictable, and I find no surprises in the minutes whatsoever. And I find no surprises. The market's even discounting the Fed Fund future for December at 78% as we speak. So I think the market is digesting this well. I don't take the president's viewpoint that the Fed is doing damage or that they're crazy or whatever it may be. This is the most steady and important hand in all of Washington. You have to have a very serious, deliberate central bank. We have it under the current leadership. We've had it for a while. And I think they'll continue down this path.
As it relates to the policy path and the whole restrictive word, Fred, is that how you see what we got from the minutes from the last meeting today?
Yeah, I think that here's the issue. The Fed's doing its job properly, which is that it has to basically take the punch bowl away from the party when the party's getting good, and the party's been getting pretty good. That there's clearly an issue about how gradual they have to be in terms of raising rates. I do think there's an issue that the market may be underpricing the possibility the Fed may have to raise faster and not be as gradual, because we're in territory which we've seen before where at this very low unemployment rates, you may start to find basically inflation may start getting a little bit out of hand. It's not clear. We've actually had very good inflation numbers, inflation which has actually been quieter and less going up than we had actually expected. But you can't count on that. And so I think that's one of the reasons why there is a fair amount of uncertainty exactly what the Fed will have to do, depending on what kind of economic numbers we start to see, particularly on the inflation front. So the Fed cannot get behind the curve and allow inflation to start to heat up. The Fed has worked very hard for the past 15 years or so to really stabilize inflation, anchor inflation expectations, has done a superb job, and they certainly don't want to give that up.
Fred, there was a line about a decoupling of global growth being a downside risk. How quickly can that change the bargain? As soon as next year?
Well, I think the issue here is that you have to remember that the U.S. economy is a fairly closed economy. We really are much less affected by what goes around elsewhere in the world than many other economies are. We're really the big kahuna here. And in that sense, unless there really is serious disruption abroad, and particularly what the Fed really worries about is serious financial disruption abroad, I don't think that the impact will be huge on the U.S. economy. Our economy is doing very well, and that's the kind of numbers they're seeing and the way they're acting.
And
I agree could hurt us through the strength of the dollar. Richard?
No, I agree with Fred on that. I think we're both on the same wavelength here. The underlying point is you conduct policy by being a firm anchor for the economy, a reliable basis for our economy, given that your job is to provide the monetary wherewithal. And you don't throw it out the window for either some political purpose, which is not going to happen. And you don't throw it out the window just because of, unless it's systemically disruptive, because of problems elsewhere. As Fred said, we are the big kahuna, and we're very lucky to have that position. It doesn't mean you're smug about it or you ignore what's going on in the rest of the world, but something would have to be very serious in order to affect us. And right now it doesn't seem likely, but we'll have to see. The last thing you want to do, by the way, is give in to any political forces, doesn't matter where it comes from, because again, the world depends on the central bank of the United States, the Federal Reserve, to be dependable and not to shift moods. And I don't see that happening. It's been working on this franchise for so long now, and particularly the last 15 years, as mentioned, to resurrect things and get them on an even balance. They're doing a good job, and they will continue to do so, in my view.